Wang, what's your initial reaction to this? I mean, GDP coming slightly short of estimates, but the other numbers pretty much gangbusters.
Yes, I think the GDP growth, we were expecting the first quarter number to be 19.5, and now it's a bit shy of 18.5. It looks like from the other activities that March industrial production was a bit weaker than expected. And that I think coincides with also a few days ago, export numbers were a bit weaker than expected. But the good news is that retail sales and consumption part, which has been lagging in the rebound, has picked up to 34% year on year. So as Rishant mentioned, we are seeing a bit more balanced recovery in the Chinese economy.
A balanced recovery, does that mean that we're seeing a job market wages, which have shown improvement, trickling down now to spending?
Yes, exactly. I mean, that's our expectation is that this year, China's recovery is going to be led by domestic consumption and exports. And domestic consumption really needs to come from improving labor market, improving household income growth, and better confidence on spending on consumer goods, but also services. And we are seeing some of those numbers coming through. So that's pretty positive for that kind of path and prediction that we have. And on the industrial side, I think it had been relatively strong also on fixed investment. But now with policy starting to normalize, we see that, for example, property investment and infrastructure investment going into the next few quarters, that should slow. So, that early pickup in construction, in industry is going to give way to more household consumption, maybe also autonomous manufacturing rebound, and also, of course, a bit of export pickup as well.
Tao, retail sales, a huge beat there. That would, of course, fit in with the trade surplus narrowing as well. Now, with retail sales going up that much, of course, base effects, we have to also remind ourselves, it fits into the whole purpose of the five-year plan of not just dual circulation, but a shift to a more service-oriented economy.
Yes, it does. Although, as you mentioned, base effect plays a big role. So last year, consumption was hit harder and recovered more slowly. Partly because of income being hit and labor market being hit, but partly also because of precautionary saving, right? People saved more than usual. This year, with confidence improving, we should see people's precautionary saving coming down. So it's consumption really coming back to normal, and so we should be careful extrapolating this trend to say this is, in the next few years, we should see this kind of growth. Actually, you should see relatively gradual move towards increasing consumption and services. But this year, we see really that catching up taking place.
Well, absolutely. And if we look at the quarter-on-quarter number, seasonally adjusted here, we were looking at 1.4% growth for the first quarter. And we actually, 1.4%, I should say, we got 0.6%. Tao, that perhaps is a read-through of what's happening and perhaps gives us more of a clue as to what we might see in terms of sequential growth looking to the rest of the year, right?
Yes, I think the first quarter, we have always had sequential growth is going to be weak. There are two main reasons. One is, of course, during the holiday period, there were renewed cases and also renewed mobility restrictions. The government had put in stay-in put policy, strongly discouraged people to travel. And so, the Chinese New Year holiday related to travel and services and consumption were a bit weaker. And so that dampened the momentum somewhat. The other reason is that there were some kind of a policy vacuum, if you will. Last year, we had strong stimulus, especially on the fiscal side. This year, they didn't follow this front loading of fiscal spending and disbursement. The MPC was only in March, and that approved the budget plan. So there were a bit of a vacuum period. There were no additional stimulus coming through. So the first quarter sequential growth was weak. But in the second quarter and from second quarter onwards, we should expect the sequential momentum to pick up to more than 6% for the rest of the year, even though the year-on-year growth will come down because of the base effect.
Tao, when you take a look at the markets right now, the CSI 300 index extending its decline. Is there reason to be disappointed with the numbers we're seeing this morning?
I think that the market, after seeing very strong exports and seeing all these the January, February numbers, may be a bit disappointed about the weakness. But I think still this year we are looking for 9% growth, and I think most people are at between 8 to 9%, so it's still very strong. I think earnings are going to be very good. I think the market may be overreacting a little bit, and if the market were worried that policy could tighten too fast if the numbers are too good, now they shouldn't worry that much because with the numbers coming a bit weaker, maybe policy will not tighten so much. But I think the market sentiment is also affected by a number of other factors. For example, tighter regulations on shadow banking, on local government platforms, and on tech platforms, and so on. And as you mentioned earlier in the program, recently on Huarong debt, and people are a bit worried about some credit volatilities there.
The property market is important to China. We have the PBOC trying to rein in borrowings done by real estate companies. Might that hurt the economy eventually, later on in the year, perhaps?
It is possible that these tightening policies on property is going to have a negative impact on property activities. I mean, that is our expectation. So far in the first quarter, we haven't seen much of an evidence of that yet. Property sales remain very strong. Of course, there is the base effect, but even if we take out the base effect, it's still pretty strong. And the risk, of course, the stronger a property market is, the more likely the tightening measures will be implemented. So yes, they will potentially be binding, and that will bring down the property-related construction and investment somewhat. But our forecast of 9% for this year has already incorporated a slowdown there. That's to sort of make sure growth is more sustainable. The government is worried about property bubble and related financial risk. So I think that's a reasonable move that they try to control risks there.